Bank of America and Phil, they may be laying out a bear case for Tesla, but you're taking the other side of that trade. Give us your sense of your rating and your price target for Tesla.
Yeah, sure. We have a $305 price target for Tesla. And we actually raised it significantly from $212 because now we're starting to model autonomy and the impact of Robotaxi and FSD software licensing, which we think is going to really be the story. They're trying to get as many Teslas on the road because they want to push autonomy. In fact, for Robotaxis is 70% of our valuation now for Tesla.
Autonomous driving technology has made significant advancements in recent years, with Tesla leading the charge with its full self-driving technology. While this video will uncover the intriguing details behind Tesla's remarkable rally, it's also going to address the role to be played by Tesla's evolving goldmine, the most anticipated robotaxi business. This is the Tesla project that eliminates the need for a human driver, improves safety on roads, and also provides a more efficient and convenient form of transportation. This Tesla project aims to break the boundaries of the possibilities for the automotive business, and once again, prove that Tesla is not just a regular car company. In this video, we're going to explore the comments of RBC analyst Tom Narayan, who predicts that the robotaxi and autonomous vehicle businesses in general could potentially transform society more than anything else in our lifetime. So, stay with us as we take you through this eye-opening discussion on what could turn out to be Tesla's next goldmine. Let's get started.
We're joined by Tom Narayan, and RBC Capital Markets lead equity analyst of Global Autos. He's with us here in the studio. Hey, Tom. Hey. You were out with a note this morning that made a lot of interesting hypotheticals about how big the proposition is for autonomous driving for Tesla. I mean, you make it sound like robotaxis are going to take over the world and Tesla's going to have a big market share with this. Like, paint for us this future.
Yeah, and I think what's really pushed a lot of this to the fore is the deals that they've struck with Ford and GM, basically opening the supercharger network, and effectively these two OEMs coming to Tesla and choosing their platform. And I think this shows how they could sell software to other OEMs. The reason why robotaxis could be so transformational is their ability to save literally millions of lives. I mean, everybody in this room probably knows somebody who's been affected by a car accident, saving trillions of hours, opening up opportunities for mobility to the disabled. There's so many countless reasons why cities in Europe and China, for example, are already talking about banning private cars in the future, saving space and real estate in the cities. There's so many great reasons, and why regulators, I think, ultimately will push this. Now, this is far in the future. I do caveat that. But when you do the math on this, the potential for profitability of this is massive, especially versus just a car company.
Tesla's goal, as much as that of its CEO Elon Musk, is to have as many customer-owned Teslas serving as robotaxis as possible by having them install the company's self-driving software. In a previous interview, Musk talked about how the average passenger car is used for just 10 to 12 hours per week, spending more of its time parked at its owner's home or place of work, which makes the value proposition incredibly inefficient. According to Elon Musk, by installing autonomous software, those vehicles could spend that idle time out on the road as a part of a ride-hailing network, earning both money for the user and for Tesla. In response to updates such as this, Tesla bulls and analysts like Tom Narayan are feeling more upbeat about Tesla's stock as they envision a future of robotaxis. Hey guys, welcome back to Tesla Tomorrow. Tom Narayan is highly bullish about the potential for Tesla to capitalize financially as driving becomes more autonomous. In a note to clients, the analyst predicted robotaxis and autonomous vehicles in general could transform society more than anything else in our lifetimes, serving millions of lives and trillions of hours. Narayan says increasing sales volumes at a lower profitability, coupled with a greater focus on autonomous driving, is a winning strategy for Tesla. He also added that over time, robotaxis could make up 70% of Tesla's value, with sales of autonomous driving software and vehicle sales representing the remaining 30%. Why has Tom Narayan said this? Keep watching to find out. But before we get on with it, if you like this type of content, hit that like button, subscribe, and turn on notifications to keep up to date on everything going on with Tesla. In a recent note, Narayan stated that given how much value and convenience robotaxis offer, the low pricing and the elimination of the driver, consumers may start switching away from private car ownership. He noted that the technology could change the prevalence of car ownership, making it so people wouldn't necessarily feel the need to own cars. While Tesla sells cars, it also sells subscriptions to self-driving technology. This balance was especially topical for Tesla lately, as the company has recently expressed a willingness to accept lower margins on car sales. The automaker plays what it views as a long-term game to get its cars into the hands of more people, who would ultimately be moved to pay recurring amounts for the company's software. Elon Musk recently added a little more color to his vision for the Robotaxi project, and serving as a self-driving, ride-hailing platform appears to be a good part of the value proposition. When Musk spoke about the potential business model, he described a revenue split that could run 50-50 or even 70-30 in favor of the car owner. This could absolutely transform Tesla's financials, because instead of just manufacturing a vehicle and selling it with a gross profit margin of 25%, each car could potentially earn a margin of 70% or higher over time. Tom Narayan claimed that he thought the attach rate for Tesla's Robotaxi would cost $200 a month, and that is fairly low at nearly 5% of Tesla's vehicles in operation, stating that there's room for the company to lower prices, boost volumes, and cash in on licensing opportunities once there's greater awareness of the technology. He wrote, "We expect that as it becomes obvious that autonomy software saves lives and dramatically reduces accidents, governments will mandate it for all new car sales. That could increase penetration for Tesla's technology, but also lower prices. Assume a price of $50 or so down the line, and the technology could see parallels to the trajectory of broadband internet." Narayan sees Tesla's full self-driving product bringing in $36 billion in annual revenue by 2035. According to him, licensing revenue could amount to $24 billion by then, assuming Tesla has a 50% share agreement with the original equipment manufacturer and sees 20% penetration of non-Tesla auto markets. The Analyst noted that despite its estimates that the standalone car business sees gross margins dropping from 18% in 2023 to 15% by 2035, on a combined basis with FSD and licensing, they increased to over 30% by 2035. Tesla's plan to develop a full driverless taxi without pedals or even a steering wheel has prompted Tom Narayan to raise its price target on the company's shares by more than 40%. He raised his price target on Tesla shares from $212 to $305, while maintaining an outperform rating. Narayan's new target made him one of the most bullish analysts on Tesla shares. He was behind only KGI Securities analyst Jennifer Liang, who has a $335 price target. Tesla's autopilot software could also fall into the level 2 category of autonomy, meaning that cars using it aren't fully autonomous, and that drivers still need to monitor conditions and take control of the wheel. No doubt robotaxis may be far in the future. However, when considering the math on this, the potential for profitability of this is massive, especially versus just a car company. Technology research and investment firm ARK Invest says solid safety data and a huge progress being made in AI could see Tesla roll out its fully autonomous robotaxi this year. The firm claims that 22% of its simulations predicted that Tesla will commercialize its fully autonomous robotaxi this year, with another 33% of simulations predicting first commercialization will happen next year. But what do you think? Let us know down below. And if you want to know more about what Tesla's been up to over the last few days, go ahead and click on this next video on your screen. See you there.